Hello, I'm David Bulow, Director of Educational Programs at Performative, the online community for corporate finance, accounting, treasury, and related professionals. I would like to welcome everyone to today's webinar, Understanding a Changing Environment. Don't risk losing revenue by not implementing a subscription-based commerce model. Understand the changing environment of subscription-based commerce to ensure you're not missing out on the benefits of this compelling revenue model. Learn from industry expert IDC Deb Osswald about the benefits of subscription-based commerce model as well as the pitfalls to avoid when migrating your business to this model. Deb Osswald from IDC and Jon Gettinger from Aria Systems will share why a subscription billing model has become so popular with companies of all types and is an attractive way to increase and smooth revenue streams while enhancing their predictability and enabling deeper and more frequent customer engagement. A few items before we get started. I would like to thank Aria for helping us make this event possible and their generous support, which helps us deliver this webinar at no cost. For those who are returning, thank you. And for those who are new, welcome. Performative is the fastest growing online resource for senior level corporate finance, treasury, and accounting professionals. We provide a uniquely valuable online peer network which provides direct subject matter expert advice. We are an ad-free, noise-free community where we encourage and expect peer-to-peer collaboration. Check it out at performative.com. The link to this presentation and a recording of this event will be sent out to all attendees within 24 hours. If you would like the current presentation to follow along, it is already posted on performative.com/resources for you to download. In order to qualify for CPE, you must answer all 3 polling questions, and you need to have pre-registered for CPE. If you have any questions around CPE, please email them to cpe@performative.com. We encourage you to ask questions by using the question box in the GoToWebinar panel. We will do our best to have them answered. If we do not get to your question, we will forward them to today's speakers so they can follow up with you directly. You will be asked to take a short, less than 1-minute survey at the end of the presentation. Please give us your feedback so we can bring you the best content possible and continually improve. Now for the learning objectives today. This discussion will help you understand the varied benefits of subscription revenue, define considerations for selecting a subscription commerce platform, and understanding real-world customer experiences and best practices. It gives me great pleasure to introduce our first speaker, Deb Oswald. Deb is Research VP of IDC's CSP Operations Program, wherein she drives research efforts around communication service providers' investments in software-driven IT, network, analytic, big data, cloud, and machine-to-machine service-enabled customer experience management. With over 25 years of communication industry experience, Deb joined IDC from IBM, where she was the global communication industry strategy leader. Previously, Deb held key strategy and marketing position with Amdocs and Telcordia, was VP and equity research analyst with Goldman Sachs, and was research manager with Gartner. Earlier, Deb was a strategy consultant with AMS and spent 10 years with AT&T in wireless and wireline billing, business, and operational support systems. It is a great pleasure that I turn the presentation over to Deb.
Thanks very much, David. Good afternoon or good morning, depending on where you are. So our session today, as you talked about, is how to help you understand the changing environment and basically exploit the opportunities available to you through subscription-based commerce. You know, as we get started here, I just wanted to be clear that you know, there's a lot of different business models, and obviously, you know, it goes without saying that a particular company needs to employ the one or ones that makes the most sense for them. So in that context, you know, we'll kind of embrace these remarks as, constructive and to be applied as appropriate. So this model that I'm sharing with you now is an IDC kind of model about how the evolution of IT systems has grown and changed. And we're now at the top here of this platform called the third platform, as we call it at IDC. And really what it's saying, simply put, is that the world has evolved to a point where cloud commerce, cloud business models, mobile broadband, and mobile devices are making applications and content ubiquitous and available pretty much everywhere. So with that being said, and part of a long time my background is not just financial, but it's also in the communications industry where there's a tremendous amount of data, very complex billing requirements and things, and that's why I've worked closely with our hosts, Aria Systems, because they recognize that if you can basically do billing in telecom, then you can do billing for anyone and anybody, and so their systems are competent in that regard, and that's why I'm happy to be here today and share some of this with you. So in any event, with mobile broadband and mobile devices proliferating and becoming much more readily available, especially smartphones in the developed markets, as I said, people have the ability to get even corporate applications, on a tablet device, on a smartphone, what have you. And so it's increasingly important with kind of our on-the-go, consumer and business users that companies embrace, this new model. It's not just a personal thing where we all have our cell phones attached to us. It's really a business thing as well. And so, businesses are a little bit slower in some respects and in some industries to recognize this opportunity to really connect with your customer on a more frequent basis. And so I'm going to go through some of the benefits of embracing a subscription commerce model and how this is really fast becoming the new norm and something that enterprises should really consider. So, really, what are they and why should you care? I think it's important, especially if you're in the either financial or IT role in a corporation to understand. So for one thing, in the middle, I have a whole host of different billing capabilities, just, simple generic things that billing systems need to accommodate. And as your business grows and changes, and I bring up my telecom background because I think it's relevant, again, that some of the models that have been employed in the telecom industry with, per usage, usage-based pricing, subscription pricing, time of day pricing, promotions and events and things, it can get very complicated. And so it's really important that today, your infrastructure systems, and in particular your billing and ordering systems, are able to, capture services, requests for new service, and then be able to bill for them in a manner that's appropriate for the service and the end user of that service. And so these are some of the different types of billing models that we see companies employ in all different industries. And so I have some vertical markets on the left, transport, logistics, and other things, but obviously, transcending there and going, retail, insurance, financial services, and whatnot. More and more companies and consumers are embracing the subscription model. And, why do they do that? And that's, on the right is the list of bullet points that, basically tell you some of the benefits of why customers are finding these so attractive. And the consumer example would be the Apple iTunes store and, the App Store in, Google, Android, however you want to look at it, or iTunes. These are all very common and becoming increasingly popular very rapidly with companies. And it's because you can just buy it and try it. You buy an app. It's a low-cost investment. It's $1 or $2 or $3. A song, what have you. And so the buy it, try it mentality is pervasive in the business world as well as the consumer side of our lives. And so the easy sign up, the no contracts and hassles, and no financial commitments, it basically breaks down some of the barriers for companies to try new things. And so, by doing this, you're basically empowering your buyers and you're enabling them to get what they want, when they want it, and how they want it, and to try it for as long as they like. And so that enabling of experimentation with new services, provides a very engaging model for companies. And so you're basically kind of not only more attractive to your subscriber base or your customer base, you're giving them additional options to get what they want in a way that's much less sort of committed and threatening, if you will. So cloud commerce, I moved ahead here on the slide. Cloud commerce is obviously very important for these reasons. It's the essence of the model that demonstrates that you're able to get whatever you want, over a broadband connection, preferably, to any device wherever you are. And this has, again, been embraced by consumers, businesses alike. It's both intra and inter-enterprise. We're seeing many, many more partnerships being formed for cloud commerce engagement between companies in various supply chains in multiple industries. And so you're able to see third parties providing content to an aggregator, and then this company being an aggregator providing a multitude of services and content to others. And so effectively, I'm actually evangelizing this cloud concept for your business, again, for your consideration, depending on the goods and services that your company provides, because not only is it a great way to engage with your customers, it's also a great way to engage with your partners. And if you have some upstream partners, that you can engage with them and leverage cloud billing and subscription commerce models with these companies as well. And with the right robust billing system, the right capabilities, you're able to charge in any fashion that's appropriate for the goods and services being provided, and in a way, again, that's going to be both attractive for you and the end user. In this case, actually the supplier, as well as the end user. So let's move on to the next slide, because I could spend a lot of time on that one. But so what's in it for your company? We talked about, I went through the points on the left, and I just brought them up here as a reminder that from an end user perspective, it's a very compelling case, subscription commerce models. And so, but what's in it really for your company to go and experiment with something that maybe it's not broken now and there's no issues and no reasons, then why should you look at this? Well, for those in the financial group, especially CFOs of public companies, I can tell you, having worked at Goldman Sachs for 4 years on Wall Street as an analyst, I can tell you that, lumpy revenues don't go over great with shareholders. And, smooth, visible, highly visible and recurring revenue streams are obviously much more attractive to shareholders or potential shareholders and investors. And therefore, they will also bring a measure of stability to your company's revenue streams. So that's a positive from a financial aspect. It's also a positive actually from a product, merchandising and inventory perspective as well, because you're able to get, whether it's a hard goods or soft goods or virtual goods, you're able to effectively understand better what your demand will be, and you can foresee demand in a highly predictive and highly accurate manner by looking at past, revenue streams and past purchasing patterns and things like that. And so there becomes an element of insight that is then provided to the companies that embrace this model that they would not necessarily be able to get otherwise. It also obviously, goes without saying, enhances cash flow. And anytime you can enhance cash flow, then you're enhancing the company's ability to put that cash to work and to earn a return on it, sooner than you would have otherwise. And that's obviously also a very good point and compelling. So the visibility of the revenue stream, the predictability of the revenue stream, I would say, as well that the multitude of models that could be provided is really important. Enticing new customers to try your offerings, like we talked about before, it enables that buy it and try it opportunity. So you can get more companies, whether it's, again, if you're business to business, you can get companies. If it's a business to consumer, you can get consumers to try your offerings more readily because there are just no barriers, no commitments. So that means that you'll have, probably a higher penetration rate of your target audience. It also, very importantly, I think this is frankly one of the biggest points, so I'll spend a couple of minutes on this, is enables rapid time to market for new services. So from your corporate perspective, being able to bring new offerings to market quickly is fantastic. But if your IT systems, your billing systems are inhibitors to bringing those services to market because it takes a while for them to be able to be updated and enhanced and customized to support the new offering and potentially a new pricing model or pricing plan, then you're losing time to market, you're losing potential revenue, and you're also losing a competitive advantage because obviously if you can bring something to market sooner than your competitor, you'll have that market advantage and mind share and thought leadership, perspective from your customer base and such. So it's really important to recognize the tremendous value, especially in today's fast-moving market with changing preferences and dynamic consumer behavior patterns of what's hot, what's not. These things change all the time and daily and even within the days, and so it's really important to have a system that's much more responsive and supportive of new service offerings coming to market. And so a cloud-based billing system it's remote and it's highly capable from a feature functionality perspective. It's got robust features and functions and scale. It will support your business in the way that it should be supported. And it also, obviously, this would, having a remote cloud-based system would also eliminate the need for expensive billing system modifications. And as we mentioned, it would also enable, from the company perspective, it would enable experimentation with innovative pricing models. So you could try out different pricing models for services and see which ones resonate best with the customer base. And in that way, you're learning, you're experimenting, and you're getting more insight into your customer preferences, and then able to feed that knowledge into product managers for future iterations of new offerings and be able to tweak things, on the fly and very quickly. And that sort of, responsive or potentially proactive innovation and pricing is extremely, regarded today by companies and customers alike, and especially SMBs that are looking for, small businesses that are looking for services or cloud-based offerings or any other type of, IT offering in particular are very attractive. These things that all come bundled, and they're attractively priced so that they can try them and buy them. And this is absolutely where the market is going. And so it behooves the company to be able to be equipped in a manner to support this new set of commerce requests from customers. And then, also it obviously, as I mentioned, breaks down barriers to new markets. So if you want to create a new business line and something that's been, vetted internally and, strategically blessed, and you've got the corporate mandate to go forward and introduce a whole new set of offerings, this is the fastest way, to get to market, to try it. It's got basically no, there's next to, no upfront investment. So you can engage with a company that provides this, cloud-based billing capability, and it will effectively cost you next to nothing to get off the ground and up and running and be able to, support this new line of business. And if that should fail, you're only paying for the services that you're actually using and for the time that you're using them. And so there's no big investment in a system to support a new line of business or a new experimentation in a new market that, may fail. Hopefully it doesn't, but in the event that it may, then you don't have a greater sunk investment. So it's very attractive from that respect as well. And then, of course, it provides the opportunity to exploit recurring revenue streams and enables, like I said before, competitive response and not just to be proactive in innovative pricing, but also to be very quick. If competitors come out with new pricing offers, it absolutely behooves the company to be able to respond quickly in the market. It looks like they're in touch with their customers' needs and they know what they want. And otherwise, companies will again be increasingly viewed, sort of in a negative light if they can't meet the needs of customers, not just from a product and services perspective, but also from a pricing model and business model perspective. So as I mentioned before, I'll just reiterate some of the values of rapid product introduction. And I know many of you may be in different roles in companies. You're not in the product management realm. You're most likely in the financial domain or the IT domain. So but I know you both understand what's required to support new products and offerings, and whether it's, again, tangible and intangible goods and services. And so in this regard, it's really important that you understand how, inhibitive it could be and cost prohibitive it could be to create or either create a new system to support a single line of business or to, implement significant changes and enhancements in pricing models in support of a new line of business. And so that's where really a SaaS-based billing platform just, is a tremendous enabler to fast time to market and innovation, as well as capital preservation, of course, which is in this day and age, it's critically important. So, also I think, as I mentioned, it really enhances competitiveness. It really enables the company to be more responsive and to, to understand the changing market dynamics and be able to price accordingly. Many times you can come out with an offering, just like you might see in the stock market, certain companies will come out and IPO at a certain price, and then the market, will change dramatically. It's the same thing, the market may bear a particular price and a particular model at a certain time, and a month or two later, that could change dramatically. And if you're, unable to, to change your pricing that rapidly in response to you could see suddenly, very, sharp declines in adoption rates or take rates different. You'll be able to get all that feedback and all that data and be able to make quick changes to see what, to try to enhance adoption again and go back up the curve as opposed to down. So there's, tremendous flexibility and financial advantages in doing this. And obviously just, the scalability as well, because to put in a very scalable billing system, which again is my background. I've spent 10 years with AT&T in billing, and I can tell you that, again, telecom billing is super complex, may not be your industry, but you can understand with all of the different variables and components and services today in the telecom and broadly defined telecom market, there's tremendous opportunity to bring some of this complexity, and more industries are facing this. We're seeing this across the board in industries facing increasing pricing complexity and sourcing complexity, and so being able to account for all of that and be able to support it with your systems is critical. And who wants to go and spend multiple millions of dollars on a new billing system that can scale and has the robust feature functionality set that you want, when you don't even know if the new business venture will, succeed or fail, and your margins are obviously going to be, under tremendous pressure as a result of investing, all this infrastructure to support a new line of business. So you can really, sort of unencumber the new line of business and give it a fighting chance from a financial perspective as well as a market perspective, because it will be more attractive to customers when it's priced, in a more innovative and dynamic manner, and that can be, again, supported by this type of a SaaS billing model. And technologically, these systems, you may be wondering, well, how does this integrate, with our existing IT systems, and can it, get a feed from my customer system and my CRM system, and can it, send, data files? And yes, it does, and some companies, I'll go through in a couple of slides, I have some of the things to look out for and make sure that you, put on your list of criteria when you go shopping for a SaaS billing platform. So we'll cover those in more detail in a couple of slides. But right now it's really important to explain just the fact that long lead times and the general inflexibility of existing systems is just unlikely to support new business models going forward. And you guys may be struggling with these today in place, these legacy systems that are inhibitors to future growth of the business, but you've got so much invested in them that it's, it's very difficult to just, cut the cord. And that's why the beauty of this model is it can run in parallel. You can just start a new line of business, and it can run in parallel and be supported by this SaaS-based billing platform that's, remote and up in the clouds. And, therefore, it's, it's going to have great failover. It's going to have great disaster recovery. They can do things like on-the-fly software updates that the system continues to operate through that. It's pretty amazing what some of the new technologies are capable of. And so, again, embracing something like this today, getting your business comfortable with this new model, being able to get feeds into CRM systems and out of other systems that you want to, integration and interoperability is absolutely part of the equation, and that's an expected requirement. So that is not a surprise. That is not atypical. That is actually very common and understandable for clients to want, and that's why companies like this are able to support that. And Aria is, in my opinion, one of the best, if not the best, in this regard. So that's why I'm happy to kind of come out and support them in sharing some of the advantages of these business models and this billing system with you. And from a customer perspective, again, increasingly, especially small, medium businesses and large enterprises, they're very comfortable buying from the cloud. Businesses are becoming increasingly more reliant on SaaS applications offered from the cloud, and I have some data on the next coming charts on, from IDC as what we forecast SaaS adoption and the cost factors of that. So maybe we should get into that. But I think it's important to understand that these systems, can accommodate new markets, new languages, alternative currencies. So again, if you're looking to expand globally and maybe you're domestically, situated today in North America, and you're looking to expand into other markets, perhaps a Spanish-speaking market or an Asian market, it's a whole lot easier to do something like this than to go and have your system modified. You're going to, spend a fortune to have it customized and modified to support this, and it's going to take tremendous amounts of time. And you could be up in a couple of months or less. Anywhere from probably 2 to 8 weeks. Depending on some of the complexity. So it's important to understand just the tremendous advantage and flexibility for your company to embrace something like this, as well as for the end users of this type of service. So on the next chart I mentioned, IDC has some predictions about cloud software, and one of the things is that the SaaS model is going to effectively account for $1 of every $5 spent on software in 2016, which is a mere 3 years away. So when you think about it, we've got tremendous amount of data and studies and a huge cloud team at IDC that I work closely with that shares this information. And I can tell you that I've got just reams of reports and details that demonstrate that not just this particular. I thought this was kind of a very relatable data point, but in addition, just overall that SaaS is going to basically outpace traditional software product delivery, and it's going to grow just about 5 times faster than the software market as a whole. And so what that tells us is that whether it's your industry and whether it's a billing system, or it could be a CRM system, or any sort of, it could be, NetSuite or Sugar CRM or any of these, with financial applications. Everybody's familiar with the Salesforce.com model too. All of these models are growing by leaps and bounds every year. There was kind of a slow start to adoption, but it was also a difficult economy, like 2008 and 9 and 10. But last year, 2012 was a big boom year, and things really started to pick up again, from an economic health perspective. And so we saw, tremendous adoption there. And I think it's just one of these things that this is the way the market is going. And again, the sooner that you kind of get on board and at least investigate and if not embrace this model, I think your company will be better off for it as a result, because it will provide you with that business flexibility and that increased capital preservation capabilities and a very cost-effective way to meet the billing needs. And we're just seeing more and more companies embracing this model. And in fact, even in my core industry in telecom, I'm seeing the billing giants, they've all cloud-enabled, virtualized their software systems, and they're seeing increased demand for that, as well. So even in an on-prem model, which is not nearly as flexible or cost-effective, we're seeing cloud enablement and virtualization of these platforms. So at the end of the day, when should you really look for a SaaS-based billing solution? I mean, we talked about the fact that it's definitely fast. If you're quick product introduction times, you need a billing capability in a very short period of time, that this is a great way to go. Launching a new business line or service offering, it's very cost-effective. It doesn't require the capital outlays, and it provides you with a predictable operating expense. So you know what you're getting into, and there's a small plus or minus few percentage points margin of change that's likely over any significant period of time as a result of scale and adoption and things like that. So if you start billing at 100,000 customers and then you ramp up to 1 million in a matter of months, obviously there'll be some incremental additional costs, but it's going to be extremely cost effective, and these systems scale beautifully, and they operate at a very, very low cost margin. So it's really super affordable for any business of whether you're large Fortune 1000 enterprise or or medium or small enterprise. It's still extremely cost effective to do this. And as I mentioned, you just can't beat the flexibility and the sophistication of the innovative pricing models and business models that you can employ through these systems. And so they support a whole different type of service per se. Let's say if you're doing something, like I said before, a new line of business, and you really need to be able to support that cost effectively and quickly, then you can do that. And the innovation that these systems enable from a pricing perspective is increasingly attractive, especially your product managers and your marketing folks will be super happy with something that gives them tremendous empowerment to charge how they want to charge and so on. And so I think I talked about these quite a bit. I'm not going to go through too much more on this page. I have another page I want to talk to you about, which really helps you to understand what to look for in a billing platform, which I think is critical at this point. We talked about the greater flexibility than on-premise alternatives and faster time to market and things. So I think let's move on to the next chart. So, what do you look for when you're seeking to implement the subscription commerce model? What should you be sure to get in that billing platform? I'm actually going to jump to the bottom and kind of work my way backwards. One of the most important things I would tell you is the last point on this chart, which is about integration and interoperability with existing IT systems. I made this point earlier to just basically reassure you that we certainly recognize that this is not an island. Your business is never an island. It's got multiple facets, multiple stakeholders and constituencies that need to be satisfied with whatever alternative is selected or proposed. And is this going to be rejected by people? Are they going to embrace it? How do you sell it internally and things? And one of the great ways to do that is to basically put folks' minds at ease with the knowledge that certain companies, like Aria Systems, our hosted, they offer an extensive API library. For the financial folks, you may know that term. You probably do. It's Application Programming Interface, in case you don't. So effectively, what it does is it provides a templated, simplified, more rapid integration with existing systems. So by being able to rapidly integrate, data and systems, then you're obviously able to get to market faster to ensure that all the systems that require data and need to share data, are able to communicate with one another effectively. And this is absolutely paramount. So I think that this is the best way to, when you're looking for a company to help you with this, you want to be sure, that they have an extensive API library, and this way that that they will be minimizing the cost and risk and the expense associated with, your implementation of this in the larger scheme of your entire IT infrastructure operation. And, so all these pre-existing systems that you no doubt have, some are newer, some are older, they all have to be able to share data back and forth. And especially, closer and closer, as we get to real time, some of these things really need to happen in near real time or real time. And so again, I would challenge a lot of legacy systems to be able to make that claim that they could do that and that they could scale effectively within a day or an hour or a minute as needed. It just doesn't happen as much. So, getting innovative with new services and new offerings, and we see the numbers of, I'm sure most of you have some kind of an iPhone or an iPad, with you all the time, and yourselves, you go onto that app store, and like every day, there's more apps, there's more content, and at a business level, it's no different. Customers are becoming increasingly demanding, and their expectations for new services and new business models are, it's never been more ferocious. So they have this tremendous appetite, and your business needs to think about how they can meet that. And dynamic offerings and frequent contact with your customers is a great way to do that. And that small little bill that they get, every month, effectively getting charged for these offerings. This is a regular way of communicating, and there's a lot of marketing potential as well, frankly, that can be pursued and exploited as a result of the opportunity of what this subscription commerce model can bring to a company. So again, it needs to, these systems basically need to support your business. It's not about doing something different than your business does. It's about doing it smarter, doing it faster, and doing it in a lower cost. You don't have that big upfront investment that most other IT systems, would require, and you're able to, much more readily get to market and support these new business areas. And so it's really important that the new, the billing platform needs to support the new business, the new service, as things grow and change and in accordance with the company's desires and new services and such. And so, you don't want to ever have your product team constrained in how, they go to market and how they offer a product because you have a billing system that's inflexible and unable to be, customized or modified to support the new service in the pricing model that's desired by the product manager. I actually was in that situation once, and it was really painful. We had an offering that could be out in 3 months, and instead it took 8 months, and that wasn't bad. Some people told me it usually could be 12 to 18 months back in the day. But you just can't do that in today's market. It just doesn't work anymore. That's not going to be supported by upper management, knowing they could have had a revenue stream out there for 6 months, and then well, sorry, but the billing system doesn't support it. Well, get rid of the billing system, they'll say, right? but you don't have to. You just have to do something new and different with this new offering, and then eventually you can certainly look to also migrate, existing offerings onto the billing platform. And this way you can slowly evolve your business and enable it, to grow and support the dynamic needs of the marketplace that you're serving more effectively and more rapidly. So I think this is an important slide to tell you about, what are the specific things that you should, look for and where you can find them really. On the next chart, just a few closing thoughts before I hand it over to my colleague Jon Gettinger, VP of Marketing for Aria Systems. In closing, I would say that this, this whole area of SaaS billing, it's growing very, very fast, and it's growing for good reason. And I mentioned, the affordability, the quick startup, the scalability, the flexibility. There's a lot of great adjectives I could use, but the agility to support new services and innovative business models and pricing plans is really the most critical element, I think, to the compelling argument about why to consider these systems. And obviously also support for different types of offerings. Again, as I mentioned, whether you're a virtual supplier, a hard goods manufacturer, any type of business increasingly, could absolutely leverage these. It doesn't have to be a cloud-based offering that you're providing to use a cloud-based billing system. A lot of folks, I get that question a lot. A lot of people think that, well, I can see this for a SaaS-based CRM offering, but why do I need subscription billing, if I'm selling a different type of product? And it's like, well, ask your customer how they would like to be, billed, and you'll see how attractive it is for them, on the buying side to have a predictable payment and a small payment at that instead of, lumpy payments on their end. So every business, benefits from this model. That's kind of the beauty of it. It's a great, both supplier and consumer of this model. It's quite attractive. So also, I think we talked about the extensive API library. We talked about the multi-currency and the multi-language support, and the fact that this provides you with the opportunity to, to really expand your business in any way you want to, and again, without the costly, integration, customization and upgrades and enhancements and things you might need to do elsewhere. And then lastly, just very quickly, high performance, reliability, scalability, and then the live releases, as I mentioned earlier, basically little to no downtime with a live version release. So this means they basically do it on the fly. It's kind of likened to changing the tires on a car while it's moving. It's pretty hard to do, and it's pretty impressive. And so, for example, Aria Systems can do this, and I think it's pretty impressive to be able to do that, so that again your business continues to go. And they just have another instance of the system that can be, turned on and moved over when things are do in fact have to be upgraded. So it's it's great. And the whole virtualization concept. I'm sure you're familiar with it. If you're in IT, you could probably give a lecture yourself on it. But the potential for redundant operations, disaster recovery, it's super easy. You've got virtualized servers, and in hypervisor you can run it parallel. You got multi-tenancy. I mean, you can do. There's lots of ways to leverage the technology to be able to have an equivalent instance, that can be turned up instantaneously to support the business as needs dictate. So I want to thank you for your time. I look forward to any questions that you might have, but for now I think I'm going to turn it over to Jon and let him get started. And thank you for your time and attention.
Appreciate those insights. It was great. We will now move to our first polling question, which you should see in just a couple seconds on your screen. Remember, if you're taking CPE credit, you need to answer all 3 of the polling questions. This is the first of 3 polling questions. If you do have questions, please use the question box in your GoToWebinar panel, and we will try to get to those in the Q&A session. And thank you very much for your answers, and we'll be closing this down. Now I'd like to introduce our second speaker, Jon Gettinger. He's a Senior Vice President in Marketing of Aria Systems. Jon is responsible for global marketing strategy. He has more than 20 years of experience delivering business software application to multi-billion-dollar enterprises. Prior to Aria, Jon led marketing of Fortify Software, where he grew the enterprise customer base from 200 to more than 1,000 and launched Fortify On Demand, the company's first SaaS offerings. And now I'd like to turn it over to Jon.
Thanks, John. Yeah, and thank you, Deb. That was a fantastic presentation, covered a lot of great points. I think anybody, regardless of what business function they're in, should be thinking about when they're looking at a recurring revenue solution. I'm just going to cover a couple quick points, and I think one of the big things that we like to talk about in terms of like why is recurring revenue so different from a billing standpoint versus other types of billing. And I think the recurring revenue challenge for a business is that because you have this ongoing relationship with a customer, you've got the amount of information you have to manage around that relationship goes up quite substantially. And there's actually, we look at it as a life cycle here at Aria. There's a life cycle around this relationship that starts from the point where you acquire them, through the iterations of billing, whether you're on a monthly plan, a yearly plan, or a usage-based plan, through the end of life of the customer. And so there's a relationship management portion to the billing process that's unfamiliar, I would say, to most financial organizations, and but critical to getting the most value out of the relationship. And so you've got this multi-step process, but from a system standpoint, this process tends to spread across a lot of different systems and touch different systems in multiple times. So for example, tax calculation. If you're billing someone monthly, then you've got to calculate tax monthly, whereas in a normal, previously if you're just doing a simple kind of invoice-based model for a sale, you calculate the tax once. In reporting, and there's this, so you're getting into this cyclical nature of this relationship that streams across multiple systems in the enterprise, whether they're manual systems or automated IT systems. And I think that's the hard part, is so you've got this horizontal, vertical kind of relationship, the horizontal being the recurring revenue process, and the verticals being the very silos of systems that you run. And so that's where the gap is that needs to get filled in most businesses, and that's where a solution like Aria, there's other ones out there for sure, but that's the gap that companies like Aria are filling today, is managing that process and making sure that all the systems that need to touch it are done in as effective and efficient a way as possible. I think another angle at this problem that'll hopefully be insightful for everybody is that, and I think especially for businesses that are new to recurring revenue, it's easy to be overly simplistic with how you approach the problem. And so for example, payment processors, a lot of the payment processing industry is starting to move into recurring revenue, and from their viewpoint, it's just, hey, we'll just charge the card every month and we're done, and that will work for some businesses, but chances are your business isn't that simple. And so we have a, kind of the way we look at it at Aria is there's sort of 4 elements to the recurring revenue relationship that need to be managed in order to create, to really define the customer relationship. And so, of course, on the lower left, you have what is the offering itself? Is it a freemium offering where you're giving people some free usage or a certain level of capability for free, and then trying to upsell them into a higher level of capability? There's actually, believe it or not, you can check this out on Wikipedia, there's actually 9 different types of freemium. So, just even the idea of a freemium can be, there's a lot of complexity that people don't realize. So there's all sorts of different ways to do freemium. So for example, one way is education. You can give free to students and make everybody else pay. So that's just one of like 9 different ways that you can do freemium. There's limited time offers, pay as you go, editions. So what's the offering structure look like? Then there's the monetization model. So are you billing someone one time, which is kind of traditional what we think of it as one-time billing, but it's just the traditional billing that we always know when you buy a widget. We call that one-time billing. There's recurring. There's usage-based, where you might charge based on how much someone uses of a resource, like a computing power or disk space or things like that. There's hybrid, where you're actually mixing recurring and usage. So most modern telephone plans, cell phone plans are actually a hybrid, where you buy a certain amount, you pay a monthly subscription fee, and you get a certain amount of usage with that subscription fee. And if you pay a higher subscription rate, you get more usage. There's prepay, postpay. And then there's when you get into telco type situations, there's what you call rated usage, where you're looking at each transaction and you're trying to rate it based on a number of different parameters. So is it what time of day did the call happen, and what, but it's interesting, we see ratings starting to show up in other types of businesses, not just telco kinds of businesses, where you want to rate a transaction as it occurs. Then of course is the contractual relationship between you and your customer. What are the terms of the relationship? Are there penalties involved for early termination? Or et cetera, or is there an amortization schedule where at the end of it there's an asset that's going to get owned by the customer, and so you need to amortize it? Is there an automatic renewal? What's the renewal term? Some businesses have automatic renewals. And then there's the whole issue around dunning. What happens if the customer stops paying for the service, either because of a credit card issue or they just stop refusing to pay? Many times, in some cases, it could be an error. The credit card something went wrong, or they're just changing out credit cards or something. So there's typically dunning. And for those of you who don't know, most of your finance probably understand this term. It's just purgatory that I think of it as purgatory, that you put the customer in. You don't want to shut off the service right away, so you put them into a purgatory and then run a process on them based on some rules that you have. And there can be a multi-step dunning process. And then finally, channels. The other aspect of the relationship is this a direct? Are you billing the customer directly? Are you billing them through a reseller or a reseller's partners or a distributor's partners? Are you in a business where you've got lines of business in your organization, where you might have a central group that supports multiple business lines, and each business line is sort of an individual operating entity within your business? So I think that's the other dimension of this thing that's often you have to think about when you're going into these systems is the nature of the relationship, and how well does a solution that you're evaluating handle all these aspects of it and bring them all together in as seamless way as possible. So Deb brought up a lot of these things. She did a great job on this, but improving agility is I think something that's often overlooked by evaluators in these situations, because we live in as we all know, in 20 years that I've been in this industry, and we've seen the acceleration of markets and the pace of market growth and change is just, it's compared to 20 years ago. It's just there's no comparison. It's amazing how quickly market, fortune can rise and fall for businesses in the markets they operate in. So agility becomes more and more important for any businesses, and agility is how quickly can you respond to a change in the market. So if your competitor comes in with a new offering, tomorrow, how long is it going to take you to reconfigure your business to respond to that offering if they do something really dramatic? And as we see, agility was a huge problem for Blockbuster when Netflix entered their market. It took them years and years and years to respond, and it was pretty much their lack of response was what I would argue put them out of business. So that improving agility is often a quality that's overlooked in a lot of systems, and you tend to want to nail the system down and spend a bunch of time with your implementers getting it nailed down, and then next week oh wow, we didn't think about this. There's a new product offering, or we want to change our pricing, or we want to add a new we want to go from freemium to paid, like one of our customers did once. They were all free for a long time, and then suddenly they decided they were going to go to a paid model. So how quickly can you respond to that change? I think that's a quality that's often overlooked by evaluators. And then finally, a lot of people ask us about security considerations, and especially if you're new to cloud solutions, one of the big questions we're always asked is what are how secure is this stuff, Jon? Is this really can we really rely on this as the same if we were running this in-house? My general answer is yes, but, and the buts are, you really got to evaluate your providers, and here's a couple points that we always recommend that you should ask. Here's a couple questions you should ask. So for those of you who take payment cards already, you know about PCI certification. Always ask what the vendor's relationship is with PCI, what their certification level is. We at Aria are PCI level 1, which is the same level that a payment processor would be. So we're very high certification standard, and that's very important because the PCI industry has a very stringent list of requirements you have to meet, and we do a security audit every year, and they're in here for quite a while going through every aspect of our system. So any vendor that's at a high level of certification is very important. What's the security staffing look like? How many people are on your vendor's team for security? And what sort of assurances does the vendor provide today in terms of security? How do they communicate their security policy to you? You can tell a lot by just how they're communicating about, if the sales guy is in there just saying, yeah, we're secure, trust me, versus, here is our written security policy, here's our, 6-page security plan, here's disaster, all those aspects. It's a big difference. Another simple question to ask, which I'm surprised many people don't ask, is has there ever been a security incident? By law, the vendors have to tell you if there has been. They have to report. In fact, if they're PCI, they have to report it. So that's a quick question: has there ever been a security incident? How was it handled? And then, of course, who are their customers? So for the smaller businesses who can't afford a security audit, the thing that you should know is that companies that do business with big businesses tend to go through security audits by these big businesses. So, for example, at Aria, when we do relationships with some of our larger companies, they send a team in to do the audit, and they'll do like a PCI level audit with us and go through, and sometimes more thorough than even PCI, go through that. So if you're a smaller business, you can leverage that the fact that these big businesses have already done it, you can take advantage of that. So look to see who their customers are already, and if they have big names, and the chances are they've done some pretty deep security diving with that. So hopefully that helps get everyone clear on how to evaluate systems, and now I'll turn it over to Jon.
We now have launched the second of 3 polling questions. Please make sure you answered all 3 polling questions for CPE today. We'll be leaving it open for just a little bit longer. I want to thank Jon for those insights. Both Jon and Deb gave us great information today. At the end of this, we will move right into the Q&A session, as we are running a little bit long here and want to respect everybody's time. I'll now close the polling question, and we will transition into the Q&A section. Our first question is, how can billing models reduce the risk of regulatory non-compliance, especially in the revenue recognition area?
Jon, do you want to take that one, or do you want me to take it?
Deb, I'd love to hear your answer on that.
Okay. Well, so billing systems are actually a very critical way to help. I want to remember the question, but I know the first part was about the regulatory compliance issues, and I know there was a second part, David, so I'll come back to you for that second piece. Okay. But it's basically a lot to do with archival of data and access of data, and it's lots and lots of requirements, as I'm sure the person asking the question is familiar with at least some of them. And I know, again, from my background, again, just to be a bit specific, but I've lived in the telecom billing world, and so there, obviously, you've got lots of issues around security of the data and everything else. But the access to customer call detail records and things of that nature, this information can be subpoenaed today. There's criminals and things like that, terrorist issues. So that obviously it's very important to be able to store these things and be able to archive them and retrieve them as needed. These data files get indexed, and so they're able to be archived and indexed and readily accessed by offsite storage typically. And then, David, if you could just remind me the second half of the question.
The second half of the question was in the revenue recognition area.
Yeah, maybe, Jon, I may turn that one over to you. But revenue recognition, obviously, they're very specific guidelines. especially, I'm familiar with them from a public companies perspective, and so revenue recognition in terms of completion and things like that, there's certain regulations that you can do, but billing systems would obviously be basically on the country and things that they operate in. They need to be compliant with the regulations around those things to the extent that it is regulated, because RevRec is regulated for public companies, but I'm not sure if you can embrace different models, obviously, for private companies. So that's something to talk to the CFO about. But John, I don't know if you have any thoughts on that.
Yeah, I mean, the rules do vary, although the FASB is definitely zeroing in on the RevRec rules. It's kind of an emerging area right now. But this is one of the good advantages you get from SaaS, and I think besides the cost advantages that people tend to get is the expertise advantage, where you've got a SaaS provider doing that work, and so you don't have to go figure that out in your organization. Now you've got to check with the providers and make sure they have done it, but just like with PCI I just talked about a minute ago, is that's the leverage you get from a SaaS provider. And for big companies, it saves a lot of cost and time to market, but even for little companies, it's extraordinary because you can't manifest those types of capabilities in your own organization typically. So by basically a product like Aria can bring an enterprise level experience and IT experience and capability into a small organization, and you can take advantage of that.
Thank you for that, John. We appreciate this, and I want to thank both of you for those great insights and discussions. Sorry if we couldn't get to all your questions, but we will work with today's speakers to get them answered for you directly after today's webinar. I have just a few housekeeping items before we end the webinar today, at which time you'll be prompted to participate in a short survey. We truly value your feedback and appreciate your time to help us continue to deliver great content. At that time, you can easily request to connect with either of our speakers at a click of your mouse. Please join us on Performative.com to continue this great discussion. Just a quick reminder, we will be holding our CFO Dimension Conference August 21st and 22nd in New York. This conference aligns directly with our commitment to thought leadership and education in the Office of the CFO. We will be sending everybody out a special discount for early bird registration for all those on the webinar today who register by June 28th. I want to thank Deb and John for their time and their insight. It was excellent information today. I also want to thank our sponsor, Aria. We appreciate the support of our sponsor and speakers to bring us this great content and knowledge that they shared today. I'd like to take this time to thank you, our audience, for your time. Again, after we close down the webinar, you'll be prompted to take a short survey. If we can ask you to participate so that we may get better, deliver the right type of content and webinar to you, we would greatly appreciate it. Also, there you will have the opportunity to request a connection with our speakers to Aria or request more information on CFO Dimensions with a click of your mouse. Thank you again. We hope to see you on another Performative event or online at Performative.com. Have a great rest of your day. Goodbye.